It is Q4 2026, 1 year from today. Bitcoin just crashed from $126,000 down to 40K. And like clockwork, the bear market came and took everything we built.
And break down the trade. We start off with today's crypto carnage. It was a gut check moment in the cryptocurrency market. Names like Bitcoin, Ether, Litecoin, even Dogecoin getting slammed today, sinking double digits and shedding millions of dollars off.
China's banning crypto again. Major exchanges are collapsing. ESG FUD is everywhere. And suddenly, everyone is questioning your sanity for believing in Bitcoin. When you're on your last leg, ready to give up, that's when the charts finally find a heartbeat. The comeback doesn't happen overnight. It's slow, it's brutal, and it is unforgiving. And those who survive, they don't just win, they become legends. Let me explain. You are now entering the crux of crypto. Hey guys, Crux here. Welcome to the ultimate pit stop for Web3 wisdom. Smash that like for Pup Tugs. He said he doesn't fear corrections, he only fears vacuum cleaners. Quick disclaimer. Earlier this week, I dropped a full deep dive breaking down Bitcoin's 4-year cycle, and another one exploring what happens if the cycle finally breaks. This video completely flips the script. It's all about what happens if the cycles keep repeating. And don't go panic selling everything. But right now, we're sitting exactly where the 4-year cycle peaks, according to 2013, 17, and 2021. To catch you up, every 210,000 blocks, or every 3 years, 10 months, Bitcoin's mining rewards get sliced in half. It's happened 4 times now: November 2012, July 2016, May 2020, and most recently in April 2024. In 2013 and 2017, peaks both landed in December, but 2021's just fell short, topping out in November. And this time, we hit $126,000 on October 6th, right before the biggest liquidation event in crypto history. You're gonna hate me for this, but 3 years and 10 months after that November 10th, 2021 peak, lands us exactly on October 10th, 2025. So if you think the White House or the Binance Insider didn't notice that, think again. When even the AI is saying that is eerily close, you realize this pattern, it isn't random, it's running to the day. I've seen a lot of technical analysts slapping moving averages on top of charts like it's some kind of crystal ball. The Pi cycle indicator top indicator is the most proven theory on moving averages. It tracks the 111-day moving average, crossing the 350-day moving average multiplied by 2. And historically, it's nailed every single top within days. Sounds perfect, right? Well, kinda. In 2021, it flashed the signal in May, 6 months early, missing Bitcoin's true November peak. That crack in the code might be the first sign that even the market's favorite indicators are beginning to break, which actually makes perfect sense. The 4-year cycle, it isn't a price pattern, it is a time pattern. Traders and investors think in terms of candles, but Bitcoin's heartbeat comes from something deeper: the tech itself. Moore's law tells us computing power doubles every 18 to 24 months, and that same exponential growth in semiconductor transistors has mirrored Bitcoin's rising hash rate and its mining difficulty. Whether by design or coincidence, the rhythm behind hardware innovation may be the silent metronome behind Bitcoin's 4-year cadence. But now, AI is rewriting the playbook. The explosion of demand for chips and next-gen hardware is accelerating innovation faster than ever before. And if anything has the power to break Bitcoin's long-standing technological pattern, it is the demand for artificial intelligence leading the charge. Here's a reality check. Mining Bitcoin isn't free. With block rewards slashed and hash rate climbing, many miners now only break free when Bitcoin hits $70,000 or more. Electricity alone can cost tens of thousands of dollars per coin. In that light, yes, for Bitcoin to justify its production cost over the next 4-year cycle, it needs to push into over the $140,000 range by 2028, just to keep the ecosystem healthy. And if it doesn't, that's not just a price dip. It can trigger deep structural cracks, crippling from the inside out. So, here's to hoping someone figures out cheaper power before the miners start selling those rigs. The theory itself is simple. Q4, the year after Bitcoin's halving, marks the peak. Everything else is just noise that dilutes this pattern. But let's go ahead and dig deeper, because these 2 data points don't just support it, it reinforces it. Across every cycle, Bitcoin's blow-off tops have consistently landed between 520 and 550 days after each halving. This is accompanied by a bear market that usually lasts about a year. The second data point shows it takes roughly 35 months from the bottom of each cycle to the next peak, which shows the peak just setting in about now. According to Rect Capital, Bitcoin's bull run may only have 3 months left. Well, that was per this article back in July, stating the market could peak in October, roughly 550 days after April's halving, just like in 2020. Now check this. Here's Bitcoin's price history. In December 2013, Bitcoin topped at $1,150 after a 575x run. December 2017 brought a blow off top to 20K, which was a 116x run up. Then November 2021 peaked near 69K after a 22x rally. We have hit an 8x this cycle from $15,500 to $126,000. Every single time the story ended the same, a brutal bear market. Negative 85% in 2013, negative 83% in 2017, and negative 77% in 2021. Each cycle brings diminishing returns and diminishing losses. So, where do I think Bitcoin will be at this time next year? I'll explain right after I show you what's happening in our Discord. We've got 3 WAP memberships, each one giving you daily live Q&As. The gem hunters are finding those low cap gems before they send. The VIP trading group has over 500 traders sharing the best trade setups. The Academy takes your trading from rookie to pro, which now comes with expanded courses that teach you how to build that perfect portfolio. Plus, we offer one-on-one portfolio audits. I've already walked over 200 members step by step through my market approach and what changes I would make in their shoes. It is not financial advice, just the exact playbook I use to win in these markets. Use my affiliate link below to help support this channel. Using the last 3 cycles as a guide, a typical pullback off the $126,000 high lands somewhere around negative 65% to negative 72%. Call it 44K to 38K. From there, diminishing returns say the next cycle's low to top multiple likely compresses to about a 5x. Putting a reasonable top around 220K, depending on where we bottom and how much the macro liquidity regime helps. In my first video last week, I straight up told you I'm not buying any more crypto, not a single Satoshi. In the second video, I said I was accumulating dry powder for 1 year from today, just in case we get the historic crash. And in this one, I'm here to remind you, you don't have to be all in or all out. I made these 3 videos to help you get the full picture. So no matter what the market throws at you next, you'll know exactly what to expect and how to move. Thanks for sticking with me until the end. Now, I want to hear from you. Where do you think Bitcoin will get at this time next year? Drop your take in the comments below. Make sure to subscribe, hit me with that follow on X, and join our free Discord server. Check my live streams every Tuesday and Thursday at 4 p.m. Eastern Standard Time. Also, check out my ultimate 4-year cycle deep dive and set up your alerts because I'll be dropping my top 5 altcoins for November. Check out my 4-year cycle deep dive right here. I know you'll enjoy it. And while you're at it, here's another video you don't want to miss. Click one of these to dive deeper into the crux of crypto.